Hello, everyone. It is good to see you. We're going to get started here in just a hot second. Just let everybody get settled into the room. If you are here, go ahead and say hello. If you want to drop your name, that's great. If you don't, if you'd rather stay anonymous, I get it. You want to be sneaky. Hello, Gandhi. Oh, join us just from Ghana. Very good. Glad you could join us today. What kind of business are you in, Gandhi? If you want to put that in there. So where are you from and what kind of business that you're in? Give me one hot second here. I just want to check my internet connection, make sure I'm good to go. Looks like I am. I'm actually going to disconnect from Wi-Fi. All right. All right, let's go ahead and get to it. All right, hello everyone. If I can get a thumbs up if you guys can hear me okay. Just saying yes, no, because I don't have, I just want to make sure you guys are good. Let me just go ahead. Oh, you're in tech. Very good. Thank you. Can you guys hear me okay? Thumbs up, thumbs down. Yes, very good. All right, thanks, Isaiah. Appreciate it. All right, let's go ahead and get started. Well, first of all, let me become the man behind the curtain. Hello, everyone. It's good to see you. Thank you for joining me today. This is financial literacy for business owners. We have a lot of information to get through in a very short period of time. So my plan is to kind of fire hose method to you, get you a lot of content here. And I'm sure you're going to have questions. Feel free to enter in the questions along the way. I will try and do my very best to keep up with that. I've got some moderators in the room, so if you've got any questions, type them in as you go. I will do my very best to get to you. We've got quite a few in the room right now, so let's get right to it. So this really is specifically for business owners. So if you are a business owner, or if you have anything to do with the finances of a business, this is going to be relevant to you. So for those of you, see some of you are in tech. If you want to tell me what your businesses are in, that way I can maybe make it a little bit more relevant for you. But a couple quick things I just want to say, obviously where are you from, what industry you're in. If you guys have any specific experience, that would be fantastic to just so I have an idea of where you're coming from. But also, just keep in mind, I don't want you to multitask. I know in forums like this, it's very easy. It's going to be about an hour. It's going to be a lot of information, but I want to make sure that at the end of that time, you guys are walking away and this has been a good use of your time. So I just want to make sure that you are trying not to multitask. Do the best that you can. I know it's hard being in a distraction environment, especially in front of a computer. I promise social media will still be there when you get back, right? Those TikTok videos, I know they're not going to watch themselves there, Mark. I know, but promise me this will be worth your time. All right, I'm going to go ahead and get myself out of the way because this is really what you care about, not so much my mug, but understanding financial literacy for business owners. So, let's get right into it in terms of what you can expect today for the agenda. We're going to be talking about the Viper method, which is the basis of everything that I teach on. Also, we're going to talk about the 4 core functions of business. And this is the 4 core functions of any business. It doesn't really matter what business that you're in. Each of these businesses, every business has to have 4 core functions. You're also going to be looking at the first of the 4 core functions, which is lead generation and sales. I'll get into all of them here in a little bit, but the lead generation and sales function is absolutely critical. I know we're talking about finances today, but without the lead generation and sales function, there is no accounting function. I mean, eventually you're going to run out of money, right? So you need to have the lead generation and accounting function, or lead gen and sales functions. Otherwise, the accounting function just becomes an exercise in how much money you're losing. Next, you've got the accounting function. Again, that's after the operations, and then we'll get into all that. And then we're going to talk about some different success strategies. So let me just put you at ease right now. Let me just say, if you are a numbers person, go ahead and self-identify. Yes, I am a numbers person. If you are not a numbers person, go ahead, tell me where are my numbers people at? Are you numbers people? Probably you are, because you're like, yeah, I love me some numbers. That's why I'm watching this, right? Of course. Well, if you are not a numbers person, that's okay, because this is not about numbers. Accounting and bookkeeping and money is not about numbers, way more than it's about rules, right? If you can use a basic calculator to add and subtract and on occasionally multiply and divide, If you understand the game of solitaire, if you understand the game of Monopoly, you can learn what you need to know as a business owner. Okay. So this is about knowing your numbers. And what we're going to do is we're going to take a strategic approach to managing your business. I'm sorry, I lost my mouse there for a second. This is about taking a strategic approach to managing your life and your business. Now, everything that I'm going to be talking about here, again, it's really hard to be strategic if you don't know your numbers. If you don't have a metric in terms of where you're going and how effective, how efficient your activities are, it's really hard to know. Okay. So for those of you who are trying to grow your business, how many people out there are trying to grow your business? If you're trying to grow your business, it is essential that you know your numbers. And this function is going to be absolutely critical because you're going to try to avoid a phenomenon I call growing broke. Growing broke. And you'll understand what I'm talking about here in just a hot second. Everything that I'm talking about here is in this book that I just wrote. I just published it a little back in May. It's called The Time Wealthy Advantage. If you'd like a signed copy, if you are in the United States domestically, I can give you a signed copy for cheaper than on Amazon, and I can give you a bonus 45-minute one-to-one coaching session. And I will talk to you about that. If you are outside the United States, you can get it on Amazon, and I will tell you it will probably be cheaper if you buy it that way, just because of the way that international shipping is a lot more difficult, and Amazon is much more well suited for that. So if you'd like a copy of it, unfortunately, if you are international, I won't be able to sign it for you, but you can get it direct from there. So in that book, we talk about what's known as the Viper method, right? So this is the first part. This is the first of the 5 points we're going to talk about. The Viper method is an acronym for vision, infrastructure, process, execution, and reporting. Okay, so I'm going to go through a couple of these items a little deep, but I'm not going to go into all of this because this by itself could take easily an hour, and we don't have an hour to go through all this. So the vision piece here, I'm going to come back to this in a second, but the infrastructure, the process, that's the system part of the business. Okay, so if you're looking at this, you're recognizing that this is a top-down look. This is a top-down approach to your business. It's a very strategic approach. And I say strategic as opposed to tactical, right? So strategic is top down. Tactical is bottom up. Tactical is when you go and say, "Oh, I really like that way that you did that one thing," right? And that's a bottom up approach, right? And that approach is not bad if you have a very specific issue and you're like, "Yep, that's the thing that solves that problem." Right? But this is a strategic approach. This is a top-down approach. So the reason why I say this is a top-down approach is because it starts fundamentally with vision, and specifically with your personal vision, right? Now you might be thinking, well, hold on a second. We're getting a little weird here. Isn't this a business sort of thing? It is. But if you're a business owner or plan to be a business owner or an entrepreneur in any sort of way, I promise you're going to want to have a personal vision. Why? Because the personal vision is what you're doing it all for. And I'm not suggesting that personal vision is the only thing you need. No, after that, you need a business vision, right? Because a personal vision is going to ask you a specific question is, where do you want to go? In your personal vision, that's the question that you're going to ask. Say, hey, in your life, where do you want to go? What's this whole thing for? If you woke up with a bunch of money in your bank account tomorrow morning, what would your life look like from day to day? Your business vision, on the other hand, is, okay, great, but how are we going to get there? That's where I want to go. Business vision is going to say, great, how are we going to get there? Now, many business owners and many entrepreneurs that I end up working with, they often come to me with a business vision already in hand. They already say, well, you know what, Mark, I really want, I'm a strategist. They say, well, this is what I really want. I want to have X number of dollars in sales. I want to have $10 million in sales. I want to have $500,000 in sales, this next year, right? Or I want to sell however many widgets, or I want to write and sell 1 million books, whatever it is, right? That's a business vision. And the danger in having a business vision before a personal vision is that you end up creating a life that exists to serve the business. Let me say that one more time. The danger in having a business vision before having a personal vision is that you end up creating a life that exists to serve the business. And I'm just telling you that sucks because I've been there, right? I've had so much where I was like, all right, yeah, I've heard this before. Let me make 50 grand a month and and then I'll figure out how to, then I'll figure out this better life thing. The unfortunate thing is that better life never materialized. And the thing is, I'm 52 years old, and like my life was just passing me by because I had all these aspirations of making all this money let me make 100 grand a month and then I'll worry about that better life thing. Unfortunately, it wasn't happening, right? Because I was focusing on the wrong things. So again, I'm not suggesting this is about playing small. Quite the contrary. It's just about being specific in terms of what you want your personal vision to look like. In terms of the business vision is you want to think about this in the context of 3 C's. Your business vision is defined with your core purpose, your core values, and your client avatar. Your core purpose is specifically what is the business in? Like, what does the business do to the exclusion of all other things? What does the business do? So you might say, well, I'm in tech. Okay. Does that mean you make websites? Right? Gandhi, do you do websites? Maybe. Do you do networking? Network cables? Maybe. Like, there's all sorts of ways to be in tech, right? But when you get really specific about what the core purpose of the business is, you're like, no, I don't do that, right? Isaiah, I'm a broker and trying to grow my business, right? So you say a broker, that could be a business broker, that could be a stock broker, that could be a real estate broker, right? That could be lots of different brokerages, lots of different things that you do, but really specifically, what is it that you do? What's the core purpose of your business? So get really specific on that. And again, almost to the exclusion of, where you would almost turn other people away because like, nope, that's not what I do. I don't do that well, even though I could do it for money. Not all money is good money. That's not what I want to do. Core values is specifically what does the business stand for? And that's specific. Yes, we build websites. Okay, great, right? So Gandhi, you build websites, but you don't fix laptops, right? Probably, I'm assuming. So if that's the case, then you can be really specific about what it is that you do. So in terms of the core values is simply what is important to you about this business. And remember, what we're doing here is we're defining the business vision, right? And again, we're taking a top-down approach because again, if you're looking to build the business, if you're looking to understand your numbers, if you're looking to understand your finances, you really need to have this stuff dialed in because this stuff makes a huge difference in terms of how well the business runs, in terms of the climate, in terms of how well people work together, in terms of how much people trust each other, and it directly impacts finances. The interesting thing, for those of you who I don't know if you ever watch the stock market, but the companies that are the best places to work have the highest levels of trust. So the Forbes created 100 best places to work, and they are among have the highest levels of trust within the organization, right? They are actually typically 30% more profitable than companies that are not on that list. And that's because they operate within a very strict set of core values and have a very well-defined DNA. So I'm not just putting core values up there because it's foo-foo and it doesn't have value. It is absolutely critical, especially if you're looking to grow a company and grow it profitably. So remember, we're building this thing from the top down. So core purpose, what's the business in? Core values, what is important to you? And how would the world be worse off if you were no longer in business? That's really important to define. And finally is your client avatar. Who are you doing this for? I mean, almost obnoxiously, this is the person I'm trying to work. I like working with married couples who are in business for themselves, that have kids at home and need websites. Okay. You have defined your avatar, right? Where you can break them down geographically, where they live, demographically, right? Who they are, and psychographically, right? How psychotic they are. No, I'm just kidding. Basically, psychotic or psychographic is, how they think, right? It's the psychology of it. So how they think, what are their attitudes? What are their lifestyles? What are their interests? What are their goals and aspirations? Right. So those are the things that you want to think about when you're thinking about core purpose, core values, and finally your client avatar. Number 2, we're talking about the 4 core functions of business. So we talked about the Viper method, right? So vision, infrastructure, process, execution, reporting. We talked about vision and where the business wants to go. We're going to build out the infrastructure that's in alignment with that vision. We're going to talk about the processes that run on that infrastructure that you built, that all is in alignment with your vision for the future. Now you define how you execute, you define how you report on the executions. That's the entire Viper method. Now we're talking about the 4 core functions of business, and we're going to get right into the meat and potatoes of what we're talking about today in terms of the financial function. So 4 core functions, they are lead generation, sales, operations, and accounting. Lead generation, sales, operations, and accounting. Isaiah, you said you sell food products to military stores but want to expand to civilian markets. Very good. So that's very specific in terms of core purpose. So your lead generation, sales, operations, accounting, I want you to think about this, that the customer's journey happens in this order. Okay. So when the customer comes to you, they raise their hand, they're raising their hand because of the lead generation that you have put out there. Right now, there's different ways to think about lead generation. It could start from simple networking, right? Or it could be advertising, which would be like outbound interruption type advertising, where you take out an ad on Facebook, or you post a billboard, or you post an ad in the Wall Street Journal, right? That's interruption type advertising. That's outbound. That's initiated by the business, right? If it's inbound type advertising or lead gen, that's initiated by y'all, right? That means like you are going on there using your little digits to say, okay, cool, I need to find a business strategist, right? And it comes up, right? And it comes up internet search. I don't think I'll come up, but if I did, that's how you'd find me. And you'd go to my website and you search that. So that way it's initiated by you, right? That was the difference between outbound and inbound. I know we're not talking about lead generation. Actually, we are doing a lead generation class tomorrow. So if you'd like to sign up for that, I'll talk about that here at the end. But that's really important to understand, because when you start working with marketing companies, a lot of them like to do, I'll just post on there 4 times a day for you, right? Posting is not lead gen. Posting is not lead gen. Posting is just getting your name out there, unless it has a very specific action-based activity that you need to be taking. That's more direct response. But again, I'm getting a little off the trail here. But lead generation leads directly to the sales function, right? So lead generation starts the conversation, however it is, whether it's outbound or inbound, direct response, networking, affiliate marketing, whatever. Then it gets into the sales function. The sales function, it picks up the conversation that started by the lead generation function. The sales function is like, hey, cool, you raised your hand. You said that you were interested. Now let's have a conversation. Right? Does that make sense? Right? Is everybody tracking so far? Just go ahead and put yes in the comments. Everybody's tracking. All right. So lead generation, sales is the next piece that picks it up. Now, the selling conversation can happen a number of different ways. And it can happen in where you might be thinking about, you want to be thinking about a conversion tool. A conversion tool could actually be someone who comes in and has a conversation with you directly. You might be the conversion tool. Thank you, Isaiah. You might be the conversion tool. The conversion tool could be a shopping cart on a website. The conversion tool could be basically whatever it is that takes the prospect into a buyer. That's the conversion tool, right? So think about that. Think about it, how a conversion tool, think about what your conversion tool would be that brings them into the operations function. The operations function is fulfillment, right? It's whatever you do, right? So if Gandhi, if you build websites, you build websites. Isaiah, if you were a broker for food products for military bases, great, right? So you've got different things that are going on in your world, right? So you know specifically what your conversion tool is. Generally, it might be a conversation. It might be other ways of getting them. It might be sending out direct mail pieces, whatever it is. And that part of that direct mail piece will be the lead gen. And then the phone conversation that you have with them is the conversion tool, right? Now you're in the operational and fulfillment function. Now this is whatever it is the business is. Right? Whether it's maybe you're a roofer, maybe you're a contractor, maybe you build websites, whatever it is. Okay. Then you head into once the operations function is done, then you head into the accounting function. Okay. So when we talked about the lead generation and sales, again, lead generation opens up the conversation, sales continues the conversation. Now we're going to head directly into the accounting function. This is what tracks and measures everything that happened, right? The accounting function collects the money. That's kind of nice, right? Who likes to collect money, right? Accounting function pays the bills. That's really important too. And the way that it tracks it is through different financial statements. And this represents directly in terms of the health and wellness of your company. Okay, so we're going to spend the rest of our time here talking a little bit about balance sheets. That's the first thing. And an income statement or a P&L. Now, who has heard these before? Income statement, P&L. Has anybody ever heard of these before, or is this brand new to you? Right? Go ahead and put that in the box. Because if this is brand new to you, I want to make sure that I'm going slow enough that you understand what what I'm talking about, but also I need to make sure that I'm going fast enough so I don't bore you guys to tears. But I'm just going to assume that you guys have seen these before, or at least heard of the concept before. A balance sheet, okay? A balance sheet is, that's right here. Sorry, my slide wasn't catching up. A balance sheet is made up of three things. A balance sheet is made up of assets, which is what is owned. Assets are what you own in the business, but what is owned in the business name. You have liabilities, which is what is owed to other people or other entities. Yes, I've seen it before. Thank you. Liabilities is what is owed to others. Might be owed to other banks, might be owed to credit card companies, might be owed to your vendors, right? Your equity is what the company is worth on paper. So if you take your assets, you deduct your liabilities, what is left over is your equity. Okay? If you did this as a person, this would be also known as your net worth. So if you took the value of everything you owned as a human being under your personal name, subtracted everything that you did not, that you owed out to others, to your creditors, what's left over is your net worth. Okay, so it's basically the same thing from a company perspective as it is for a personal perspective. Let's take a hot look at an income statement or a P&L. Now, bonus points of if you know what a P&L is or if you know what P&L stands for. I'll come back to that in a second. Income statement or P&L, they are exactly the same thing. It's just different name for the same exact thing. Income statement is actually known more formally in the accounting world. That's the phrase they use in the is income statement when you're talking for you accounting purists out there. So income statement or P&L. This is made up of is your revenues or basically your sales. This is the amount of money that is coming in, right? So if you sold something for $100,000 and that was what you got, there you go. Thank you, Isaiah. You get long distance high five. Profit and loss. So P&L is also known as a profit and loss. Man, there's a really long lag between you guys typing and it showing up over here. Sorry about that. So you got revenues, which are your sales. So if you sell something for $100,000 and you get $100,000 in revenue in, that's the top line revenue. That's what we're talking about. Top line revenues. Your expenses are what you owe, what you pay out, right? So that's not what you owe so much, but that's what you owe. So if you owed, say you had $100,000 in revenues, but you owed $80,000, it took you $80,000 in costs or expenses to make that $100,000 of widgets or whatever. Those are your expenses. So your revenues minus your expenses in a given period of time is what's known as your net income or profit. Okay, net profit or net income, right? So this is your income statement or P&L. So everything that I'm about to talk about, I'm going to take myself off this page completely so you guys can see this. There we go, because it's a little small. But everything that I'm going to talk about here is excerpted from the Time Wealthy Advantage on page 265. So if you do have this book, you can look at this. If not, this is exactly the same page. So you can just look at the screen. If you're looking at, this is an example of a balance sheet. So if you're looking at the balance sheet here, you're looking at the top line. These are all the things that you own. Okay. These are all the things that you own. So you have a cash balance of a checking account, $10,350. Okay. You have accounts receivable, what is owed to you from others. So let's say for argument's sake, you sold a bunch of stuff and people owe you $101,275. All right. Then you have some vehicles. Now these are going to be listed at what's called book value. Book value is basically what the purchase price was. So if you have vehicles and you bought this 2019 Ford van, it'd be $29,970. Now, again, I know some people are joining us from outside the United States. I just listed these in US dollars, but it's exactly the same in whatever currency. This is known as generally accepted accounting principles. Sometimes they call it GAAP, GAAP, and that is generally accepted accounting principles. This is exactly the format that you would see internationally. So real estate, let's say that you have a warehouse, you purchase it for $275,500. The total of those all together added up is $417,095. So what I want you to pay attention to is from the top. Now, I'm Give me one hot second here. I'm sorry, I'm making it difficult to find these. All right. One of the things that you're going to notice here in the terms of the balance sheet, and I'm going to get a little bit more advanced here in just a second, so just stay with me. But the balance sheet here, that top section is what you may notice is it's from the most liquid to the least liquid. What do I mean by liquid? What do I mean by liquid? Go ahead and type that in if you're wondering what I mean by liquid. I'll explain it here in a second. But basically, this is where you have the most from the most liquid to the least liquid at the bottom. And when you've got the whole balance sheet listed, right? Let me go back to that. When you've got the whole balance sheet listed, what you're going to notice from this sheet right here, these are all the assets. You can see the numbers a little bit better there. Sorry about that. So again, you got the cash balance. What you may notice is that they're most liquid to least liquid, meaning what is the fastest that I could get to cash? That's what I mean by liquid. That's what I mean by liquid. So you'll notice that the accounts receivable is 101,000. It's not as liquid as cash is, but it's pretty liquid. Meaning if I had to go out and find a buyer for my van, right, that's not as liquid, or my real estate, far less liquid, right? So this is how they're listed on balance sheets all across the world. Let's look at the next piece here, which is liabilities. Now, I forgot that I have it all blown up. So if you look at the next piece here, this is the bottom part of the balance sheet, which is the liabilities and equity. The liabilities, again, it's listed from most liquid to least liquid, meaning the shortest term debt to the longest term debt. You've got a credit card balance with Chase for $34,760, accounts payable to your vendors of $37,500. You've got a Wells Fargo loan for your van, right? You only owe $11,570 for it. And then, of course, with Citibank, you have a real estate mortgage of $105,350. All right, so now you add up your total liabilities and you've got your total equity, which is, again, if you take your assets minus your liabilities, that will equal your equity down at the bottom. Right? If you want to check my math, you're more than welcome to, but 417,000 less 189 equals total book value, total equity of 227,000. So that means theoretically, if you sold off all the assets, paid off all the liabilities, that's how much would be left over. Right? Now let's talk about income statement, the income statement or P&L. This is, again, revenues, expenses, or net income. So from the top, this is your revenues at the very top, expenses in the middle there, and your net income down at the bottom. So let's look at the top section there, which is your revenues. So your revenues, you might have your revenues broken out into two different areas, right? You might have them broken out into product sales and into service sales, right? So very good, Isaiah. Thank you. If it's most liquid, it's accessible right away. Very good. So your product sales and service sales, why would you want to break those out? Well, if you're going to notice, and we're going to come back to this in a second, but you're going to see those percentages off to the right there of product sales amount to 65.8% of total sales, whereas service sales amount to 34.2%. Well, you might say, well, why does that matter? Well, you're going to see here in a minute why that will make a difference, but you do want to track, this is known as the percentage of sales method. You want to track that. So basically what you do is you take, to factor that number, you take the product sales, it's 75% or 75,000 divided by 114, you come up with a percentage of 65.8%, right? So that's how you're coming up with those numbers, 39,000 divided by 114. So you're basically taking the category and divided by the total sales to figure out how much that individual category is. So let's take a look at again, we're going to look at the expense portion of the income statement. And this is your expenses. And this is a very, very basic income statement, guys. So just keep in mind, I kept this very, very simple, very basic. Sometimes if you're ever looking at a publicly traded company, these things can be, you might get, 7-8 pages of these, of just showing lists and lists and lists of all the different line items from the chart of accounts representing the balance sheet and representing the income statement. Okay, so just keep in mind, this is extremely basic, just for the sake of learning. So I just want to make sure you understand that. So let's look at this from a raw material perspective. These are the raw materials that you purchased so you can make the widget or make the thing, right? So that's raw materials. Maybe it's raw aluminum, maybe it's raw steel, maybe it's balls of yarn. I don't know. That seems like a lot of yarn, but whatever. Insurance expense, interest expense, commissions, wages, right? Now, what's off to the side on the right there? Again, it's percentage of income, percentage of sales rather, percentage of sales. So if you're looking at this, you've got your raw materials, which is 29.8% of sales. Your insurance expenses, 4.5% of sales. Okay. So when you get all the way down, you get your total expenses of 96,000. Now you've got your net income. When you look at your total sales at the top, 114 minus total expenses of 96, your net income is 17,680, which is your net profit percentage or your net income percentage or your profit margin of 15.5%. Okay. So what does this mean? Why does it matter? Should you care at all? Well, yeah, you're going to care or you're going to want to care, especially if you're planning on growing, because you cannot be strategic if you don't know your numbers. And the most important thing is you want to avoid growing broke. Now, I mentioned that a couple times already, but this is really, really important to think about this, because growing broke happens all the time. That companies outgrow their ability to generate enough cash to fund that growth. So you'll see what happens here in just a hot second. So let me get myself out of the way again. Very good. So growing broke is something that you have to pay attention for, and it happens in a lot of different ways. I'm just going to show you one big way that it happens. 3 key metrics that you're going to want to pay attention to avoid growing broke is you want to track cash balance history. Cash balance history, you want to track profit margin percentage, and you want to track cash as a percentage of sales. These are 3 key metrics. I'm going to go through all of them, and I'm going to go through them kind of quick. So you just want to take the math, take your notes, and then you can math them out later just to make sure that you know what you're looking at. But these are really 3 important metrics for you to track so you know and can prevent from growing broke. So let's look at this. The 3 key metrics, the first one is cash balance history. Now, this is pretty straightforward. I want to know at a glance that I can go in and look at a chart and say, okay, cool. I know that my cash at the end of January was $45,576. That my cash at the end of February was $51,000 and change. March, $51,000, right? Like you can always see the trend of the cash either growing or declining or just basically staying the same. Because now I will tell you that most companies do not have near enough cash. They just don't. Because most companies, they run on very, very little cash. And then when they run into problems, they have very little options. Usually they're borrowing at really high levels of interest rate money. I mean, there is an entire industry dedicated to giving payday loans basically to businesses, right? Like emergency funding loans. And they are really expensive, like in the 30 and 40%. And even in the United States, you might say, well, that isn't legal. Yeah, it is. It doesn't violate usury laws because usury only protects consumers, individual consumers. I know certain other countries may have something called usury laws. Basically, it's like loan sharking. Basically, you can't have exceedingly high interest rates on loans. But in the business world, all bets are off, right? Yeah, it is. It's terrible. But that's because many businesses put themselves in that equation. I don't have the book handy. Actually, I do have the book handy. This is one of my favorite books. I did not have the stage. I actually have, usually all my books are sitting on my conference table. Great by Choice by Jim Collins. You can see I've got it all tabbed up. Amazing book. One of the things I love about this book is how Jim Collins, he wrote it back, I don't remember actually when he wrote it. I think it's back in the early 2000s, but it's a very well-researched book. And the interesting thing is about the companies that grew the most. And these were companies that like Microsoft that grew from nothing, that they tracked for 30 years, that had unbelievable returns compared to the market, right? Like Southwest Airlines had like 500 times the industry returns compared to other airlines, right? And I think they were 67 times the market over 30 years. Not 67% better, 67 times. A multiple, right? And the interesting thing that they found about all those companies that grew was most of those companies I'm sorry, not most, all of those companies had cash anywhere from 3 to 10 times more than their industry peers. Isn't that interesting? And the funny thing is, for those of you who follow Warren Buffett, very wealthy man, the Oracle of Omaha, is the majority shareholder of Berkshire Hathaway, is a billionaire many times over. He's got a lot of cash sitting idle in Berkshire Hathaway. And people are going, dude, what are you doing with your cash? And he's saying, give me something good to buy. He has no problem allowing cash sitting idle because his other investments are doing so well. So the point is make sure that you have plenty of cash. What's plenty? I don't know. Hop on a call with me and I'll tell you. But the thing is, probably more than you have. Because most people and most business owners, almost every single business owner that has come to me, with exceedingly rare exception, they come to me and they want help as a strategist and they say, hey, I really could use your help. I'm like, cool, let's take a look at your balance sheet. And I'm never shocked anymore. And I'm not like, I was the same way. I get it. But their cash is woefully low. And they're trying to grow their business and they think they're going to grow out of their cash problem. But the problem is more of what's going on in here in terms of their relationship with cash more than any other thing. It's like they feel like they have to get rid of it. They have to deploy it and everything else. And I'm telling you, the healthiest companies, the companies that grew the fastest, the companies that were the healthiest had the healthiest balance sheets and they had healthy amounts of cash. Again, 3 to 10 times their industry peers. So read the book. If you don't believe me, read the book, look at his research, and you be the judge. So let's land the plane on cash balance. Let's talk about net profit margin percentage. So when you're looking at profit margin percentage, that is the thing off to the right-hand side here. If you're looking at the income statement or the P&L, you're looking at this thing over here on the right. Okay, do you see that on there on the right? Give me a thumbs up there. Okay, so when you're looking at profit margin percentage, what I'm looking at here is this thing on the right-hand side. So the columns where we talked about revenue, we've got 65.8% of sales or service sales of 34%, right? That's what I'm talking about, right? So now when we're looking at profit margin percentage, hold on a second. We're looking at those numbers there on the right. So the net income percentage here is 15.5%. That's the profit margin percentage, okay? So in this particular case, I'm going to use a very simple example. This is, now, if you pay attention to nothing else, okay, I'm going to get even bigger. I'm looking straight into your soul, okay? If you pay attention to nothing else, pay attention to this, because this right here is how companies grow broke. What I'm about to show you is how companies grow broke, all right? So, made my point there. So, when you're looking at this and you see the revenues, let's say for argument's sake that you have revenues of $10. You have revenues of $10. You have expenses of $8 and you have a net profit of $2, right? So you have 10, 8, and 2. Except your expenses go up $1. So you're like, well, shoot, I still want to make $2. So what I'm going to do is I'm actually going to increase my sales by $1 to offset that increase. Okay. So let's watch what happens. Okay. So now you charge $11, your expenses of $9, and you're still making $2. Except what happened to the net profit margin? What happened to the profit margin percentage? It went down. Your business is now less efficient at making money. Let me say that one more time. Your business is less efficient in making money. And this is how companies grow broke. You have to be on your profit margin like a freaking Band-Aid. You cannot allow those profit margin percentages to go down. If they do, you've got to recover it. You've either got to cut expenses or increase your margin higher. Really, what should you have raised it to maintain your profit margin percentage? You should have raised it $1.20, right? And it would bring you to $11.20. Your $9, that would maintain your 20% profit margin, right? You can do the math on that. If someone wants to do the math on that, revenues of $11.20. I'm sorry, I'm doing it in my head. Revenues of $11.20 minus $9 yields you $2.20, right? That is 20% profit margin, right? So if that, I'm pretty sure that maths, and that is protecting your profit margin. So I'm just telling you that you have to be on that like white on rice. You cannot allow the profit margin percentages to be eroding, because you might be making the same amount of money, but especially in a highly inflationary environment like we just came out of, you're actually producing less dollars, that less buyable dollars, right? Or less buyable money. Right. And some countries experience inflation significantly more than what the US experienced. So that is something you have to pay attention to. That is known as profit margin percentage. So we talked about cash balance history. We talked about profit margin percentage. Now we're going to talk about cash as a percentage of sales. Now, this one is a little bit tougher, and it's not like impossible. It's just you have to understand your business, and every business is a little bit different in terms of its industry, okay, in terms of how often it makes money. So in this particular case, we're going to go and we're going to look at, again, we're going to take something off of the balance sheet and we're going to take something off of the income statement. Okay. So in this particular case, because we're talking about cash as a percentage of sales, we're going to look right up here in that cash balance checking right up there. See it with the 10,350. Okay. So now I'm really interested in the cash as a percentage of sales. Cash as a percentage of sales. So in this particular case, I'm looking at the sales number off the income statement or the P&L. See the total sales up there, 114,000. Those are the two numbers I'm looking at. So let's go back, 10,350 and 114,000. All right. Now, all I'm going to do is I'm going to take the 10,000 divided by 114,000. Now, in this particular case, this assumes, let me go back here. The income statement, if I didn't make this point earlier, but the balance sheet is a snapshot over time. The income statement is over a period of time. So if this period of time, let's say that your normal business cycle, in this particular case, like I'm in the real estate business, so a lot of my money comes in on a monthly cycle, right? So if that monthly cycle is every 30 days, then looking at a monthly income statement makes sense to determine my cash as a percentage of sales. Let's say I'm a farmer, and my cash comes in, say, every 6 months, depending on my crop or whatever. Let's say it comes in every year or every 6 months. Then I would want my cash balance divided over that period of time during that business cycle. Does that make sense? So this is very business cycle dependent. So if your business cycle is once a month in terms of how often your money comes in, then it's once a month. If it's once every 6 months, once a year, once a month is probably the shortest term that I would use. You might be in a retail business, but generally there's a business cycle. You want to close out that business cycle. I would say the minimum would probably be about once a month. So when you're looking at this as a cash as a percentage of sales, what this does is it actually tracks the amount of cash that you have given your business cycle. So if your business cycle is 6 months, that's going to show you how much cash that you have for a business cycle. So in this particular case, going back to the example, I've got 8.7% cash as a percentage of sales. In my mind, that's woefully low. That's extremely low in my mind, right? I like having lots of cash. Now I hear you already. Oh, but Mark, you're losing purchasing power to inflation, right? I'm telling you, you are losing way more to not having enough cash when you have to rush out and dip into someone else's pockets that they're going to loan to you for 25 or 30% because you don't have enough cash. You're giving away far more in bad business decisions and poor money management than you are in losing to inflation in almost every scenario. So just keep that in mind. In this case, again, this is all about growth planning, and you cannot be strategic if you don't know your numbers. And again, the whole point of here was about growing broke. We're coming up on the end of this. I can answer some questions for you guys if you guys want to start typing in some questions that you may have. But really, the success strategies, first and foremost, you have to know your numbers, right? And you have to track your numbers. What do I mean by tracking your numbers? I don't mean that you just log into your checking account every morning and go, yep, there it is. Still have it. I mean that you know at any given time that you could open up a spreadsheet and see the trend of your cash balances, or see the trend of your profit margin percentages, or see the trend of your cash as a percentage of sales, or any other metrics that you need to track. For example, we started talking in the beginning about your lead generation, why it's so important that the lead generation function is because you might have the most amazing product. You might build the most amazing website. You might have the most easiest to sell product, whatever in the history of anything. And if you don't have lead gen, you will starve. I hate to tell you, but without the lead generation function and without an effective lead generation function, again, you could be the most masterful salesperson and still starve. You got to have a good lead generation function. There is just no getting around that. So that's why it's also important to track your numbers. And I would also be tracking the numbers that are really important for you to, in terms of what's driving those sales. In other words, where are the leads coming from? Everyone that's on this call today, I know came from Eventbrite. You want to know how I know that? Because I track it, right? And you'll hear from me again. I'm not going to blow you up. If you don't want to hear from me again, just say, hey, stop emailing me and I will. But if you want other stuff, I'll email you and say, hey, you interested in this? If not, okay. Yes, this is part of my lead generation function. I also really enjoy teaching, right? But I'm also writing 2 more books, and this helps me get this stuff figured out and fleshed out. So when I put it out, it's already worked through, right? There's some things I've done this particular one probably a dozen times already. I know this material really, really well. That's why I can talk so fast about like it. If I'm teaching something that I'm a little bit not as sure about, well, this becomes the proving ground, right? So I would invite each of you, put yourself out there a little bit. Get out there. I mean, it doesn't have to be this format, but if you want to really learn something, try teaching it. And I will tell you, it's murder, right? So next Tuesday, I'm actually doing a class on it's about book writing and publishing a book. I've never taught a class like that, but I've also published 5 books this year. One is The Time Wealthy Advantage. It's this 300-page book here, right? And then I've got these 5 guides here. We'll talk about them in a second. But I think I've got a little bit of credibility in being able to talk about that, but I don't know how to teach that. Well, guess what? I better learn because I'm going to be teaching it on next Tuesday, right? So I just really want to, just get out there and take imperfect action. Let's go ahead and land the plane. I've got a couple other things, and then we will wrap up for today. If you are interested if you are a Facebook type of person and you are interested in joining me in my group, I generally post stuff in there all the time. I don't blow people up too much. I'm just going to go ahead and put this link in the chat. You are welcome to join. There's obviously no fee or anything like that. You can just go ahead, and this is for the Time Wealthy, the Time Wealthy Advantage Facebook group. And again, just all the main thing is don't be a jerk. If you're a jerk, you will be booted. We don't have time for jerks in there. Life is too short to put up with jerks. So if you're a nice person and you're an entrepreneur and you saw value in this and like more value and more content like that, you can come in there. Also follow me on Eventbrite, and I'll go ahead and put that on there as well. For more content like this, guys, I've got a couple of other things coming up, specifically tomorrow. In fact, I've got a one that's going to be on social media optimization. So if you're interested in that, I'll go ahead and put that link up there. And then finally, I do have one final link I'm going to share with you guys, and that is this one here. This is about having the system, and this is about having the book that I just mentioned. For those of you who are domestic, if you are in the United States, this offer does apply. So you can get a signed copy of this book here. I'm holding it up. Otherwise, you can see it also on the screen. A signed copy. It's way cheaper than on Amazon. And I will give you, I mentioned a 45-minute, I put 30-minute up here, but it's actually 45-minute one-to-one coaching session that I will do. Now, here's what I will do. If you are an international person and you buy the book, just message me. I'm ungodly easy to find. I'll even put my email up there. I'm very easy to find. If you email me and just say, hey, look, I bought the book, I'll give you a 45-minute coaching session. I have no problem with that. One other thing too is you can also get all 4 of the guides that I held up here for additional money. So you can get this book and these 4 guides. I'm going to go ahead and put that link up if you'd like to go ahead and buy that now. And I am willing to hang out just for a few extra minutes for some questions. But if you guys don't have any questions, I will go ahead and land the plane. I do want to thank you guys for sticking around and hanging out. Let me go ahead and get this up there for you guys. There is that. There's the link for the books and the 45-minute coaching offer. So yeah, if hopefully you guys found this helpful. One other thing that would really help me out, if you did find this helpful and you don't, even if you don't intend to join me on any other thing, if you could give me a rating on the on Eventbrite. I've got 1 5-star, and I didn't even know that was a thing. Someone had mentioned it to me. So if you could go back in there and give me an honest rating. If you don't think it's worth 5 stars, and then don't. But if you do, then please give me 5 stars on that. That would really help me out in terms of ratings. All right. Hermeka, thank you ordering the book. Okay, excellent. Are you where are you out of, Hermeka? I'm sorry if I'm butchering your name. Are you local, or are you? I say local meaning domestic, or are you international? Yeah, you have a great day as well. You might be dropping off already. All right. You guys have a great day. All right. Thanks, everybody. All right. We'll go ahead and land the plane. Have a great rest of your day, everyone. Take care. Bye-bye.